Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, earlier investor in Bitcoin and tech founder. Welcome, Ian. How are you today?
Hi, John. I'm good.
Excellent. Recovered from your trip from the UK, all right?
Yeah, pretty much. I reckon back in the heat and humidity.
But
Excellent.
I wouldn't say that. It's a bit cool and chilly out there. It's almost UK-ish.
Hardly.
Anyway, making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address US $39 trillion in debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is today with his latest press release. Ian, what does it mean by watch out below?
Well, we've had markets being stunned by the Trump-Iran conversation for 6 or 7 weeks now, and markets typically only focus on one thing. So we've been doing that thing, and oil has been obviously the output of it, and things react to that. But markets are moving on because clearly, I can't think anybody would say we're going to get a resolution soon.
No.
And we've got the economy to think about and other things, basically. And really, it's what is happening with currencies and stock markets at the moment is that they're kind of out of control.
That can't be a good sign if you're talking about war and then out of control markets.
Well, we've got a situation in Japan where they are debt to GDP is something like 260%. The Bank of Japan owns more than 50% of the debt of the country. They've got a great new leader, by the way.
Sure.
But the Bank of Japan is intervening in foreign exchange markets, which only really works if it's to calm it down or smooth the passage. You can't change things that trade 5 trillion every day because a central bank is not big enough to do that.
Yep.
The Bank of England found that in 1993 when they got kicked out of the European rate mechanism. But the Bank of Japan is trying to force the yen higher.
Right.
And so far it's been failing, pretty much.
Okay. And so is that weakness of the yen, is that accidental or speculative?
Well, it depends who you ask. I don't think it's accidental.
Right.
And I don't think it's speculative. Sure, I mean, there's always people betting one way or the other. I don't think the market really thinks the yen is going a lot weaker because it's got a lot weaker in the last few years.
Right.
The Bank of Japan doesn't want it to get any weaker, and is trying to force the yen higher.
So I was going to say, so why does Japan care about the weak yen? I mean, you sort of half touched on it, but didn't quite sort of delve into it.
Well, a comparatively weaker currency with someone else is good because the goods you produce to sell overseas are cheaper. But we don't want to have a collapsing currency because that leads to hyperinflation.
Yep.
And that's the big payoff. So everyone wants their currency to be slightly more competitive, but not a great deal more competitive because then everything ends in tears. So, the Bank of Japan is playing a really high wire game with the markets, and normally the markets win because they've got more money.
Okay, sure, absolutely. And so they
remember the chart from last week, the monthly chart where above 160, were the 40 years of recession stroke depression in Japan.
Yep.
That rate has gone, and suddenly we're back at where we were before 1985.
Yep.
So they just don't want it to collapse because it could easily go to 300 or something from 160.
So why don't they solve it just by raising interest rates?
They can't raise interest rates because they have so much debt. So they have to pay more and more on the debt.
Yep.
We can look at the Japanese interest rates in a minute. More and more on the debt, like same conversations in the United States. And it's a doom loop. They're both those countries in a doom loop they're not going to get out of. So thrashing around, wasting, I think it's $70 billion that you can't get back. We'll look at the charts in a minute where really the rate hasn't changed.
No.
Having done that, just makes the situation a lot worse. So now the market thinks they're having to sell US treasuries to sell the dollars and buy yen.
Yep.
Whether they're actually doing that, we'll only find out when they release their accounts. But if they are doing that, then there's clearly a big pressure upwards in interest rates.
Yep. So you think that $70 billion is a deliberate signal to the market given its size?
No, I don't think that. I think that's what they ended up spending.
Yep.
To get it down from 160 to 155, but it's back at 157 and a bit at the moment.
Right.
So it's changed like 2% or something.
Yep.
So they've spent all that money and nothing really has happened.
Right. Okay. So in one respect, this is an important red flag for other markets.
It is, because once markets get hold of the eternal debt crisis, then there's going to be a big change as investors move money out of government bonds. And you know what it's like. It's okay for ages and ages and ages, and then suddenly something happens, and then suddenly lots happen.
Yep.
And the United States is helping Japan in terms of talking to markets and reassuring markets and all those sorts of things. And markets are just going, wow, they really are in trouble.
Yeah. So it's just not just a foreign market, foreign exchange matter then, is it?
It's a fundamental sign that the country is bankrupt.
Yep. I mean, the level of debt to GDP in itself would suggest that.
Absolutely right. And the fact that your own central bank owns more than 50% of your debt means it's a complete basket case.
Yep.
But they have got a new leader who's very good.
Okay.
Her job is enormous.
Right. Okay. And it sounds very much bleak. If you're obviously dealing with Japan, one would suggest, or have investments with them.
Well, nobody really owns any Japanese bonds because the Bank of Japan owns most of them.
Yep.
And they force Japanese insurance companies to buy the rest of them.
Right.
Like you and I can't just go and buy them anyway, like we could US treasuries. You have to get a special license to buy them.
Right.
And recently, no one has applied for a special license, I should imagine.
Okay. Is there anything else out of your release that you wanted to touch on?
Yeah, so US stock market's going crazy, beginning to look like it's going to be a big blow off top. All the pundits have been talking this for years, and so you let them get it wrong.
Yep.
But when we look at the charts, it really has gone crazy. Like gold went crazy last year. Look at the relative price action to show you how crazy it is.
Wonderful. Did you want to move through to the charts then?
Sure.
Thank you.
Here we go. Can you see chart of gold?
I certainly can, thank you.
Awesome. Let's not talk about that. Let's go
No.
left to right to Bitcoin again. So Bitcoin's had a good run. This is the long-term buy zone, which seems to have held nicely. Haven't even touched the bottom of it. Broken out, but capped by this 200 moving day resistance. So it's had a pretty good run. Currently at sort of 80,000, but you can see that it means something because you've had the market get really close to it and then big down day today. So these things do actually mean something. Whereas Ethereum, which is supposedly the great asset that you should buy if you're looking at tokenization of real world assets, has gone up as Bitcoin has gone up and reached 2,300 and has really done nothing there.
Yeah.
So that's been a disappointing move compared with Bitcoin.
Yep.
Gold on the day has had a bad day, so we're trying to make higher highs and higher lows, and we've kind of hit that mid zone there at, let's say, 4,750.
Yep.
And got rejected there because Brent has gone up again. So this is spot Brent. So with the high at 120 and currently at 108, because the news today is surprise, surprise, there is no peace deal.
Right.
Whatever.
Yep.
Silver starting to look a little better. Unlike gold, we're making new higher closes pretty much. That's today, so we haven't closed yet today, but it's looking a lot more positive than it was. Let's have a look at dollar yen. So here we go. So above 160, Bank of Japan's a seller. So you see the big down day as they went and sold $70 billion. They've pretty much been in the market for a week now. Whether they're actually selling more or talking about it, I don't know. But quite clearly, we haven't gone that far so far. You can look at it 2 years ago. I've even got the 2 years ago when they came in at the same level, 160.
Yep.
They gave it a real battering, aided by talk of the Fed selling dollar yen as well, which they didn't actually. But everyone was talking about it a lot more. But you can see that there's a real shunt down in price. And I'm not saying we're not going to, but currently we haven't.
Yep.
So,
and who would be the buyer of that if they're selling?
Market makers.
Yep. Just pure speculators.
No, market makers. People like them buy and sell dollar yen, for example, because we make the market.
Yep.
We're making a spread. We're trying to make a spread on it. We're not speculating. We're adding liquidity.
Okay.
So compared with the dollar itself, the Dixie, which is the dollar futures, it's kind of doing its own thing. So the dollar futures have come down from peak of oil, where it was at 100 and a bit, and has dropped and is kind of making a bear flag, i.e. it's stabilizing, consolidating, possibly before going lower. US Treasuries has seen a lot of selling recently, but Treasury is in holding prices up and therefore yields down by buying back their own treasuries, off the run treasuries. Kind of crazy when you're $40 trillion in debt, but that's what they have to do. They're trying to keep markets at least liquid. But you can see every time we get to this level here, this 4.5, things get a bit fraught. But really, what I want to talk to about is this. This is the NASDAQ. So since we bottomed, we have had, I'm not even going to count it. That is the 30th of March. And this is obviously Friday. So we've had 5 weeks of continually going up. Now, there are other times when that's happened, but nowhere near as sharply. So that did go up, but then it kind of petered out a little bit.
Yes.
And the Nasdaq is particularly nuts at the moment, and it's all semiconductors, chips,
Right.
chip stocks, and the chip stock spend and the AI spend is basically holding both the US economy and the stock markets afloat, but it's doing so really well, right?
Yes.
And here's the S&P, which you think would be more rational, but clearly break of resistance, boom, off we go.
Yep.
More telling, I think, is that the Dow Jones hasn't done any of those things. So the breadth of the market is probably record narrow, i.e. only a few stocks are going absolutely nuts, which is holding everything up. And the reason why it holds the index up is that the more the stock is part of the index, i.e. the bigger market share it has, the more anybody buys it, that they have to go and buy those shares, the index.
Yep.
Like the people buying it, i.e. the lost the words. Anyway, yeah, so it's all going crazy.
And do you see that occurring or continuing on for some period of time?
Well, here's gold. Right, this is the big blow off top. Look, gold lost 20% in a day, the biggest move ever in gold. Only last year.
Yep.
In fact, only this year. 28th of January. But we had a similar thing. We had 31st of December, so that's easy to calculate. 29th of January. So we had 4 weeks of absolute insanity in a market that has never had any insanity.
Yep.
And then a big blow off top. And if you want a really big one, you look at silver, right, which dropped 40% in one day.
Yep.
So when you see things starting to move like the Nasdaq is, you go, well, okay, it doesn't have to have a blow off top, but it's got to end sometime. Because what goes up comes down. But it's velocity and the steepness of it tell me that it can't last very long. And when that happens, really, I think there is going to be a big problem.
Right.
And that problem will end up with the liquidity problem, which will always end up with the Fed adding liquidity to the markets. And like I was saying in the press release last week, making things worse and putting a Band-Aid over it till tomorrow.
Yep. Okay. Something to definitely look forward to in the future weeks then.
Absolutely. So that's pretty much it for the moment. We've got US PPI out this week.
Yes.
And we had Chinese CPI and PPI out earlier. So month-on-month CPI was up 0.3%. PPI annually was up 2.8%. And CPI year-on-year up 1.2%, which seems low, but it's actually moving a lot higher than it was.
Right.
So the trend for inflation is growing.
Right. Anything else been released this week?
Let's have a look. Well, we've got, UK GDP and the usual stuff with employment in the States. But really, all eyes are on US CPI. Right. Because with a new Fed chair at the next meeting, at least President Trump will be wanting him to cut rates, if no one else. But he's only got one vote out of 12, so may well that he has to struggle to stop them hiking rates.
Right. Okay. We watch with interest. Anything else you wanted to cover off before we finished up?
No, it's all good.
Excellent. Well, thanks again. Always enlightening, and look forward to, with interest, how those US indexes go. And as you said, whatever goes up must come down. So hold on to your hats by the sounds of it.
Yep, indeed.
All right. So that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website, or alternatively, you could subscribe by accessing the link at www.siberia.com. reynolds.capital/contact. Thank you very much again, Ian, this week, and thanks for all our listeners.
New website, by the way. Just
excellent. Well,
yep.
Look forward to having a trial through it.
Excellent. Thank you, Don.
All right. Thanks, everyone.
Cheers.
Bye.
Bye.